Bruno, ETFs really are your game. Just last week, you launched an alternative energy ETF. We haven't seen that before. You've got a social media one. Walk us through the thesis here.
Yeah, for the Yieldco Etf, as it's called, it's an alternative energy play, similar to REITs, similar to MLPs in the sense that they're pass-through entities that generate income and pass through to investors. But Yieldco, unlike MLPs, they focus on alternative energy companies, solar panels, wind farms, and they have long-term contracts, and they pass the income received from those contracts to investors. So it's interesting because it's more of almost an infrastructure-type play, not highly correlated with equity markets.
Your ETFs are all passive?
They're all passive index-based, yes.
Now, there's a lively debate over whether, active management should exist in the ETF business, whether it has any place there. What's your view?
Yeah, active management should exist across different vehicles, including ETFs. PIMCO has been very successful offering actively managed ETFs. They make sense in certain asset classes, particularly fixed income, as PIMCO has showed. And there's some active managers that are great. It's just very difficult to do consistently, and there's very few people that can do it. But yeah, active management, generally makes plays. It's just difficult to do.
And why wouldn't you want to do that?
Well, I think
it's difficult.
I think it is difficult. I mean, what's interesting that you're seeing in the in the ETF space is what's called smart beta, which really it's a form of active management that we've seen for a long time. Buffett-like.
How does it work?
Well, what you do is you go into certain factors that have demonstrated over the long term that they do better than the markets. And this is nothing new. These academics have proven this, whether it's value investments, small caps, momentum, low volatility. So smart beta is basically a passive way to put a lot of these factors together into an index, into an ETF. And so it sort of blends some of the components of active and passive.
How do you decide what ETF to bring to market?
Well, a lot of it is driven by our in-house research. A lot of it is driven by our clients. So we're very much focused on bringing products that are relevant and that's going to add value to our clients' investment process.
Say a Yieldco ETF. Is that something that you developed because of customer demand, or is it something you looked at the number of Yieldcos being created and thought, well, there's enough here to create, finally there's enough of a market for us to overlay it with an ETF?
Yeah, so in this case, it's the latter. This is an emerging asset class. You haven't really had many Yieldcos. This is an asset class that's been IPO'd and bringing many of these assets to market recently. And it's enough scale to develop an ETF around it. It's an interesting asset class that we really like. And you have the benefit of putting them into a package where you diversify. You're not only exposed to a few projects, you're exposed to 20 companies with projects around different asset classes, different countries, different geographies.
And your social media ETF?
The social media ETF was developed in-house as well, and again, it was a similar sort of concept. This is a high beta, high volatility play, and the idea here is to diversify, so you don't have to pick which is going to be the winner within the social media space. You can diversify across a number of properties, not only in the U.S., but also in China and other markets.
Bruno, but hold on.
Go ahead.
Is there a single social media company that isn't working, that people don't like?
Well, social media is an interesting play because it's sort of a winner-take-all type of business. And so, if you look at, within the professional space, it's LinkedIn. If you look within the friend space, it's Facebook. And the differences are going to be in the markets where you're not allowed to enter, like in China, for example, where U.S. social media companies cannot participate.
Bruno, do any of your ETFs have built-in leverage?
No.
What's your view on built-in leverage? Does it have any place in ETFs?
You have to be very careful with leverage in general. And one of the problems with the leveraged ETFs that exist is that they're, very, very often not well understood by the retail investors. And so the issue, if you want, with ETFs
Hang on a
is
second.
that
The retail investor doesn't understand that anybody promising you 3 times the S&P 500 return isn't giving it to you for nothing?
Well, and that's the issue. A lot of the leveraged ETFs reset on a daily basis. So if you buy it at a point in time and you say, hey, the S&P 500 went up 10%, I'm 3 times levered, I should be at 30%, it's really not how it works because it's path dependent. So it really resets the leverage every day. And so that is not really well understood by retail investors. That's a little bit of the issue with ETFs, that they're available to very sophisticated investors and retail investors. And so that's something that we're very careful with. We design our own ETF, just make sure that it's something that it's easy to understand by the retail investor.
KYC, know your customer. Thank you so much for joining us.
Thank you,
Bruno.
Bruno, he's the CEO of Global X Management. Thanks for joining us.